Hello, Jim here. Selling options is a great way to make some extra income both on a weekly and monthly basis. Today, I've got two additional companies that I really like that I can make really good premium with. I'm going to share with you why I like them, and they're currently not overpriced and they have earnings far enough in the future that you can still make trades. So I'm going to go into a bit of detail. I'm going to share with you the most recent trades I made on them, and then also share with you a good setup that you could potentially make on both of the stocks. So stay tuned. I think it's going to be well worth your while. Okay, now the first company I want to share with you is Eat. It's Brinker International. If you're not familiar with them, it's the parent company of Chili's, one of my favorite places to eat. They recently, or not recently, back in April 29th, they did have earnings. They were good earnings, beat both normalized actual and GAAP actual, and significantly beat revenue. So my guess is they're probably going to do it again. If we look at their earnings revisions, so they have had 18 up revisions, only one down, and 16 up revenue revisions and zero down. So I think they'll probably have good earnings again. If we look at them long term, they, in my mind, aren't overpriced. They've had a little bit of a drop off recently. But they have very, very good premium. Their current earnings per share is nearly $9. Their PE is 18.3. Valuation is B minus, which is pretty good capital structure. Market cap is $7 billion. They do have a fair amount of debt, 1.7, and I'd rather see a bit more cash. Let's look at their profitability. A minus, their profit margin could be a little bit better. They have really good return on equity. I don't think I've ever seen 314. I don't know if that's 100% accurate. But they also have good return on capital and also return on assets. If you look, they've been increasing it. So if you look back, percent difference, this is the 5-year average. So if we look at return on equity and return on total assets, they've increased it quite a bit, from 4.83 to 12.96. And then for return on capital, they 5-year average is 6.82 and recently 15.82. Cash from operations look good, 634 million. So profitability, that's good. Growth, they have A+ growth, so nearly 20% on a yearly basis. Rarely do you ever see all A's and A minuses, especially for a restaurant company. Let's look back at earnings again. So let's look at earnings estimates. So they're going to do 884 this year, 992, so a 12% increase, then 1108. They're only projecting out to 27, which I think is fine. Sometimes when these companies go out 4, 5, 10 years, it's a little bit ridiculous. Now, if we look at bar charts, we could see they've come down a little bit. They're pretty near their average. If you can trade them in this area, closer to the bottom of the Bollinger Band, I think that's good. They have kind of slowing momentum, which isn't necessarily a bad thing if you don't want to own them and just want to trade them. I've been really surprised how much premium that they have. Now, the recent trade I did with them here, this is my Patreon. This is what I share with my members. I make the trade, then I send out a notification right after I made the trade. This one I did just this past week, 3 days ago. I sold 2 vertical put credit spreads on EAT at 140 and 130, expiring on 815, so like a 30 DTE. It was only a 16 delta, so relatively low. I made $267. Now, if you haven't bought the long 130, the long puts, which some of my members don't, they don't typically, buy the long puts, you could probably double that amount of premium collected. And I mentioned here, one of my Discord members actually did a trade in EAT that kind of opened my eyes again. I've done trades on EAT before. But I was really surprised how good the premium is at this time. The last trade I did on them, I believe I closed 2 weeks early. So typically, if you do a vertical put credit spread and then you close it for a nice profit and then open a new one later, that's better than just rolling all in one trade. So worked out pretty well. I share details from, in this case, it was Fidelity, but if it's from Schwab, then I'll show details from Schwab. Now, can we do this trade currently? So this is what it looks like. You can still do really well. So in this case, I'm also looking at 815 for EAT. So almost 12, 13% below what the price is, 140. Again, if you look at the Bollinger Band, that's right here. Now, if you could do even lower, if you want to take less risk, you could approach 130, especially if it's down on Monday. You might want to do 135 or 130. Let's see what this is. It's still a 17 delta, but you can see it was down on Friday, and even after hours, it looks like it's down a bit. But at this point, I would, if I wanted to do the trade again, I will typically start from the mid. I'll go usually $5 from the high end of the ask. So instead of 175, or I might do 175. I've been surprised recently where I've done the ask and the trade has gone through, but I typically will go to 170, then I'll review the order and then place the order. And that's typically what I did over here. And then as soon as I do that, I share it with my members. I post it here, then I also post it in Discord. If you're curious about my memberships, details will be in the description. I don't require you to have a phone call. If you do one of the coaching levels, you talk to me, you don't talk to someone else. You literally sign up, and first meeting will be with me. It's not someone else like some of the other YouTube traders do. I prefer to let people gain access to me fairly easy. I also don't make you pay a lot on the, in the beginning. I have the Trader Club memberships 25, the coaching club, there's one at 59 on a monthly basis, one at 200. And it's mainly because you'll be meeting with me. If you do the 200, it's 30-minute meetings every week. I only have 3 of those just because I don't have a lot of time, but and they're all full right now, but one of the members has mentioned that he's going to probably move to the $59 a month, which is perfectly fine. I let people move up and down all they want. I let them leave, come back. So I just wanted to mention that. Also, if you're curious about Seeking Alpha or Barcharts, also I'm an affiliate. I will get a kickback, but you do get a discount if you go through my affiliate link, at least for Seeking Alpha. Barchart, they don't really give you a discount. They will give you a lower price, but it's not really that much of a discount. I use both. I prefer Seeking Alpha. If I was to pick one over the other, I probably would pick Seeking Alpha. This is the first one. EAT has worked out really well. And again, when you look at the premium and you see this much premium, even if we go down to, meaning you want to take a lot less risk, we could go down to 135 and 125. And again, we're, at 135, this is probably a 13 delta. So I like to trade them. I can do quite well at 130. It's almost a 16% discount from the current price. And this is my favorite trade. This is 25, almost 30 days out. I think it's 28. Let's see what the DTE is. 26 days. So tomorrow it'll be 25 days. I'll also sometimes go out to September. But a good company to trade on if you, like me, like to eat at Chili's. They also have another chain or two, but they do really well. So that's the first company. Let's jump into the second one. Now, the second company I wanted to talk about was DocuSign. You might wonder why I'm interested in DocuSign. I'm a software consultant by trade. I've been a software developer, consultant, engineer, whatever you want to call me, going back probably 30 years. My last client ever in this whole software realm is creating a competitor to DocuSign. So I like to keep an eye on them. I like to see what they're doing, especially with setting up software for a competitor. But then I found it works out really well to trade them. They're not really overpriced. They're in the middle of their 52-week range. 79, they were as high as 107 and as low as nearly 50. Earnings per share is 357. So they're bringing in a lot of cash. PE is 22.21. Earnings coming up on 9/4. So you have some time to make trades. They recently had earnings in June. and they beat earnings. They beat both normalized GAAP and even revenue. Now, earnings estimates look pretty good. 357, then 389, then 447, then 459. So they're increasing, not as steady as some other companies, but doing quite well. Earnings revisions, 15 up or 15, up revisions, 6 down, 20 up revenue revisions, and no down revenue revisions, which is really good. I like to see that. Dividends, they don't pay dividends. Valuation, D plus. I don't think they're a D plus, but if you're selling a vertical put credit spread or a cash secured put, I'm typically trying to get a 10% discount. So a 10% discount from 79 is right around 70, 72, maybe even lower. At that price, I do believe that they probably are C plus, something like that. Capital structure, 16 billion, but 132 million in debt is all. So they could pay that off. They have 948 million in cash. So they could literally wipe all their debt away pretty quickly. They're probably going to do that. I wouldn't be surprised. Growth, not the best growth. They do have earnings growth, which is good. They have very good earnings growth. But growth could be a bit better. It's a D. So they're not growing. They're not really a momentum play, which can be good. And you can see here it's a C. Profitability, though, I really like their profitability, A plus. So, and you can see here they have really good margins. They also have really good return on equity, and it used to be higher. It's come down a little bit. So has return on capital, but return on assets has actually gone up a little bit. So like to see that. Cash is from operations looks really good. They don't have a ton of employees, so the amount of cash per employee is really impressive. So everything I like to see there. Now, financials, I like to see steady growth. So you can see here 701, 974, 1.4, 2.1, 2.5, 2.7, just shy of 3, 2976, and then a little bit. Looks like they slowed down a little bit, and that might be why they've come down recently. I also like to look at the balance sheet and come down to supplemental items. And then I'll look, are they buying back shares? So it looks like they bought back a little bit, but then they increased it from 201 to 205, 198, 193. So they hopefully have set up a buyback program, but it hasn't moved that much. So I'd rather see them buying back more shares. I wouldn't be surprised if they don't have something in place. Now, if we look at bar charts for the Bollinger Band, they're right here, right in the middle of their Bollinger Band. The lower band, if you do like a 7250 or, like a 67 or 69, you're right below the Bollinger Band. The lower band, if you do, something like a 67 or 68, you're actually quite, fairly underneath it. Green is above yellow for RSI, so it looks like a little momentum is beginning to happen. The RSI is in the mid 40s, which isn't bad. It's a little bit. It shows that it's not really overbought. It might be slightly oversold, but I wouldn't even say it's that. But it's not crazy price compared to some of the other software companies. Now, the last trade I made on them. This is again my Patreon. I share this every time I post a trade. Even if I'm closing a trade, I'll also post it in Discord. So here you can see I did a 70.60 that I closed back on 7/18. Oh, it was expiring 7/18. I closed it on July 7th, so about 10 or 11 days early. I made 227.25, and then after closing it early, my ROI went from 111 to 143. And at the time, I couldn't find another trade. So I always tell people rolling is just closing your current position and opening a new one. If you can't find a good trade with rolling, but you can close it for cheap, then go ahead. I paid $10.75 to close this trade. And now I'm looking to make a new trade on them. Because they've come down a little bit more. So probably this week I'll make a trade on them. And then next, let's just jump in. Let's see what it looks like to make a trade on them. So 75.65 This is for 8/15, so I believe it's only 25 days. So tomorrow it'll be 25 days. So it's pretty recent, 23 delta. So a little bit higher than I typically like to see, but I have members that prefer to do, sometimes they want to do weeklies. A lot of them will only do monthlies. I like to go 2 months out. My favorite trade is like expiration of 45 to 60 days. But I could try 70. Let's see what 72.50 looks like. And there's only 60. I don't want to drop all the way to 60. So 65 to 60. So I'd have to leave it to 65. So it's a $7.50 spread, the 72.50 minus the 65. Not enough premium for me. I like to make at least $1 premium for every contract. So in this case, I might go out. And I like to do monthly, so I would go all the way out to the monthlies. 72.50, what does that look like? 29 delta, or was that 26 delta? That's almost the 27 delta. So I might look at 67.50. We just looked at the Bollinger Band, that was significantly under the Bollinger Band. So 67.50 is 18 delta. I bet if I went to 65, it would be like a 12 delta. Yep. So 67.50, and then I would probably lower this to 57.50. So I'm in that dollar range. The ask is as high as 145. The low is, or the bid is 66, and $1.05. So what I would typically do is I would go maybe all the way up to 145 to get the trade out there. It may not get filled. If it doesn't get filled, I'll lower it by $5. So I might do, went too high. I might do the 145 or go a little bit lower. Maybe the first trade I'll do 140 because I would be really happy per contract. I typically do 2 contracts. So I could potentially look at making 280s. Now it's for 61 days. So tomorrow it'll be 60 days. It's Sunday afternoon. So I can potentially make 280, do 2 contracts. And again, it may not get filled. I find that Schwab's a little bit harder to get filled compared to Fidelity. I did have one member mention that they use Robinhood and also Fidelity, and they were comparing the two, and they found the bid and asks were higher in Robinhood, which was surprising. I plan to maybe look into that a bit more. But here you can see that it's pretty good return. So I would do the 2 contracts. I'm selling to open, so I'm opening a position. Someone's paying me for the opportunity to buy DocuSign at 67. Then I'm buying the open protection at 57.50. Now, if you did not want to, you could delete this, but to do just a cash secured put. So at 280 for 2 contracts, and I do have a lot of members that'll just do cash secured puts. So they might remove this, and then you could see, I would do 145 probably. So you'd bring in 290. So I don't know why that's 67.50. It must be because of the bid ask. Let's add that back and see what it looks like. Something's not quite right here. It may be because it's over the weekend. So if I do 57.50, it's 52 cents, but it's taking the 0. So this is a little bit low. It wouldn't be quite this good. And it looks like it changed a little bit. So now if we remove this, so it could potentially be 316 or even higher if I did the 197. So being that the market's closed and I'm doing this over the weekend, the numbers may look a little squirrely. But again, I could remove this one if I could play around with a vertical put credit spread or a cash secured put. So if I remove this, yeah, so the numbers are a little bit weird, but this is an idea of what I do, how I typically handle it. I would fire off the trade, I review it, I would fire it off. And then if it didn't get filled, I might, change it or replace it until it does get filled, as long as it doesn't, go too much lower than what I'm trying to get per contract. And I typically like to get at least $100 per contract. So that's what I wanted to show you guys. 2 companies I do like to trade in. I don't trade, EAT, I've actually done 2 trades recently. DocuSign, I did a trade, that last trade that I closed recently. I haven't done as many trades with these compared to some of the other stocks and positions, but two good companies. They're not overpriced and both have fairly good premium. Eat has amazing premium, and DocuSign has good, but not amazing like Eat. So let me know what you think. Do you trade in either of these companies? Do you have another company that might even work out better? That isn't way overpriced. So, and as always, thanks for taking the time to watch, and I hope you have a wonderful rest of your day. Thank you.